Now, let's talk about, I mean, personally, back in 2007, I was kind of a victim of the payday loan market when, I was in finance, I was bootstrapping my first startup, and I had to go to a payday loan company I think I accessed, I think it was 500 or $1,000 because I had to pay, I had some bills to pay, related to my startup. And, I got just cremated on the interest rates, and I didn't realize how hard it was to pay it off. I thought it was more like a loan, but it's really not. So how big is this payday loan market? I mean, because I know that's kind of, it's evil, it's sinister, and I'm just glad that you guys are kind of providing an alternative. But how big is that market?
So the current size of the market, and this is a study that came out maybe a week ago, so it's very new. So it's people across the U.S. Access about $35 to $40 billion every year.
That's crazy.
From payday lenders.
Jesus.
And they pay about $8 billion in fees for that.
Wow.
And this money is usually outstanding for about 2 weeks or one pay cycle, let's say. So so interest rates, or what we call implied APR, is quite high, and average APR is somewhere between 300 to 500% on the average. However, you could end up paying 3 to 6 times the amount you actually borrowed.
Right. I think that's what happened to me. I think if I borrowed 500, by the time it was fully paid off, I probably paid at least 3 to 4 times what I had originally, taken from them.
So what is, Jonah, what is actually very remarkable here, and it will be interesting for, I think, your listeners as well as yourself. So this is the payday market, and payday market also has a component in addition to itself, which is the anticipation fees. You remember the H&R Block and places like that where you get and fill out your taxes. And let's say you have a few $100s that are going to come back to you from IRS. So that entity will give you that money for a very high interest rate. Those are called refund anticipation loans. The entity which is giving you the loan is, guaranteed to get the money because it's coming from the government, let's say. However, you wanted it today. You can't wait for a month or 3 weeks. So there is a huge fee for that. So that market altogether is lumped together with payday loans and anticipation fees. And they are $8 billion with about $45 billion as principal taken. However, what is the most interesting aspect of it is that is the tip of the iceberg. There is another thing called overdraft fees. And Jonah, have you been hit by overdraft fees?
I was just going to get into that because, yes, I've gotten cremated by overdraft fees in a couple cases, and I've done research, and that market is 35 or 40 billion a year too, right?
That is exactly $25 billion.
Crazy, insane.
And who gets that? An overdraft fee, and you're right, the 37 is the average dollar amount they charge you if you are a penny short or a second late.
Yep.
And that is charged disproportionately, as you'd expect, on the low-income people.
Oh, of course, right.
And so when people argue that, hey, why are people in America not opening bank accounts? Or why is it that, 20 million people don't have a bank account, or they're underbanked and they have names for it, underserved, underbanked, etc. The reason is they've been squeezed out of the banking system because the banking system has probably charged them a few overdraft fees and they can no longer open an account.
So think about those two markets. The payday loan market and the overdraft fee market is about $80 billion a year.
That's
coming
for the amount accessed. So if for
right
a moment,
out of the pockets of low-income people.
So let me give you some more numbers here because I think, so let's say the payday loan industry was about $40 billion, and the fees charged were $8 billion. Overdraft fees are $25 billion, just the fees. And the amount that was at risk when you got hit by overdraft. So Jonah, let's say you had a bill that was due on the 2nd, and on the 3rd, when the payment was received by them, let's say the bill was for $7. Let's say, that's for the sake of argument. A bank overdraft can be for a penny even. So that's $25 billion, and we have no idea what the amount was at risk, probably not very much. Then there is another fee that is charged. If you have a bank balance less than $1,500 or $1,000, the banks charge you a bank account fee per month.
Right, like a monthly fee, yeah.
And then many people do not have bank accounts, so they go and print a money order at a 7-Eleven, etc. It's $1 for a money order. They pay a bill for 50 cents. Those fees alone in the US are $10 billion a year.
Wow, that's crazy. Yeah, I think these markets are bigger than people realize. I mean, and I only because I came out of finance and I worked for some large banks, Wall Street banks. I've known these numbers for a long time. I don't think the average American has any idea how big they are.
So just for their benefit, let me list them. Let's list a few of these numbers. So we got the 8 billion for Payday, we got the 25 billion for overdraft, the 10 billion for bank accounts and various small financial products like money orders, etc. That's 10 billion. Then you must have seen these auto malls where you go and buy a car, and there are usually many car dealers there. And there's always this thing that no credit check, we'll give you a car. So there are these auto loan places which sort of, you buy here and get a loan here from also. So let's say you're buying a 6-year-old car, it's about a $5,000 car, you don't have enough credit to get a bank loan. So they will give you a loan to buy the car. These are called buy here, pay here loans. And this is only for the low income people. And that is $43 billion a year.
Wow. Jesus, that big? Now, I mean,
Yes.
those are very high interest loans, right?
Correct. That's certainly above the 3-4% that we pay for auto loans.
Right.
So you can, take your boat there, your motorbike, any possession that you have. These are subprime auto and buy here, pay here fees. That's $43 billion just in fees. And then many states in the US have actually banned payday loans.
Oh, good.
And like Georgia has banned them, quite a few states have. However, what that caused is the emergence of a title loan industry where you take the title of anything that you have and give it to them. So they own they're holding on to the title of your possession, and they'll give you $2,000, $3,000, $4,000 against the title. So it's kind of, the pawn businesses where they hold the product, the jewelry or the watch, and the title businesses where you have possession of the product, but they hold the title. That's a $27 billion a year industry.
Jesus.
So now, and I'll tell you the total in the end. I won't ask you or anyone else to add it up together. There's another category. So what happens is that the average person in the US, some of them have credit cards. Yes, they've been maxed out, etc. But one would wonder, what is the average debt that a card holder has in the US on their credit card? Turns out it's somewhere between $4,000 to $5,000. This is the average amount that people have. I mean, many people pay their balance in full, so they're not paying anything.
Right.
The fees, the interest rate on those balances, so assume a 20% interest rate. So everyone who has a credit card with $4,000 to $5,000 balance is paying close to $1,000 a year in just interest. The principal is not being touched because it's 20% of 5,000 is about $1,000 a year.
Most of the people that are carrying $4,000 to $5,000 in credit card.
That is correct. Individually,
the same people that are living paycheck to paycheck.
That is correct, because they use the credit card to make ends meet. So that's why I said what's visible is payday loans, but the demand for people is from a variety of sources. They're using credit cards, they're using title loans, they're using subprime loans. So the credit card interest paid by the low-income people in the US, we've estimated it at about $25 billion a year.